Welcome to the Daily Insights that matter. In our DRTM yesterday, we spoke about how inflation in the US is on a downward trajectory, prompting expectations that the Federal Reserve will pause interest rate hikes. The latest data shows that the US inflation declined to 4% in May from 4.9% in April. This was slightly lower than the market's expectation of 4.1%. In fact, it's the lowest level in about 2 years and less than half of the highest rate recorded in the mid-2020s, which was 9.1%. On the back of inflation moderating, after a 2-day meeting, the Federal Reserve has decided to leave interest rates unchanged. After 10 straight increases since March 2020, the Fed's rate-setting committee, which is FOMC, voted to hold its benchmark lending rate between 5% and 5.25%. When the central bank, like the Fed, increases rates, it makes it costlier for banks to borrow money. As a result, lenders have to charge higher interest rates on credit cards, mortgages, and loans. The Fed does this to encourage Americans to spend less money. When borrowing becomes more expensive, people tend to cut back on their spending. However, inflation is coming down, so everyone is wondering if the Fed will raise interest rates again. Even though there's a break in rate hikes, the Fed mentioned that inflation pressures are still high, and getting inflation down to the Fed's target of 2% is still a long way to go. Many economists and the markets anticipate that the Federal Reserve will keep the possibility of a rate hike open during the next meeting in July. They call it a hawkish pause, as if the Fed is taking a breather before making any further moves. The resilience of the domestic market in the face of global headwinds is one factor that market and analysts are astonished by. To add to this, fresh Demat account openings have reached a remarkable 9-month high, revealing a fascinating trend in investing behavior fueled by a broader market rally and record derivative volumes. The total number of Demat accounts rose to a massive 118 million with an incremental addition of 2.1 million in May, which is a rise of 32% from the previous month. This incremental addition rose after 3 months of decline. Additionally, after declining for 10 consecutive months, the number of active users on NSE improved to 31.25 million in May from 31.16 million. Also, FPI buying has stepped up, which in turn attracted more domestic investors to open accounts to trade in the cash and derivative markets. The stock market has seen a surge in the past few weeks due to positive global cues and strong economic data. This has helped the markets near its all-time highs, which is why we have seen a surge in Demat accounts. Demat accounts have been presented as the key indicator of retail participation in the Indian stock market. The surge in Demat accounts is an indication of rising retail interest in the Indian equity markets who want to be a part of India's growth story. With that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.